Welcome to the AgCulture Podcast, where we share insights about the future of agriculture. Each week, we dive into the stories, technology, and ideas shaping a sustainable and profitable future for farms and rural communities alike. I'm Paul Windemuller, host of the AgCulture Podcast, and today I had the privilege of interviewing Brett Hundley from Agroforestry Partners. Now, I have to admit, I don't know a whole lot about agroforestry. So this was a sector that I had the opportunity to learn a lot about today. And I know if you're interested in this topic, interested in sustainability, also interested in investment funds and how they work in agriculture, this will be a great episode to listen to. So I hope you enjoy this episode with Brent Hundley. Hey everyone, before we get started with the episode, I just wanted to take a second to thank our sponsor, Bankbarn. I love what these guys are doing to streamline banking in agriculture. They're helping to connect farmers and lenders so that today's farmers have more options no matter the size of operation. Check out bankbarn.io to learn more. All right, Brett Hundley, welcome to the AgCulture Podcast. It's really good to have you here today.
Thanks, Paul. It's great to be here.
So I'm looking forward to our conversation. You're the president of Agroforestry Partners, correct?
Yes.
And I have to admit, agroforestry is one of those sectors that I don't know a lot about. And I love studying all the different sectors of agriculture. So I'm really excited for our conversation and to learn more about it today.
Yeah, I'm excited to tell the story. When we're out talking to people across regenerative agriculture, I think there is still some fuzziness when it comes to trees and their benefits, both from a nature-based standpoint and a financial standpoint. So I'm excited to delve into that and tell the story.
Yeah, before we get into that, why don't you give us a little bit more background on how you got to where you are today?
Sure. So I spent the majority of my career in equity research. I worked for investment banks as a sell-side equity analyst. And if you're unfamiliar with equity research, investment banks house analysts to study and become an expert in specific industries. Mine was food and agribusiness. And those analysts then counsel money managers like hedge funds and mutual funds on which stocks to buy and sell in their vertical. So I covered anywhere from 15 to 25 companies at any one given time. And then I would advise mutual fund managers and hedge fund managers on which stocks to buy and sell in that industry. I covered a wide swath of food and agribusiness, everything from fresh fruit and vegetables to grain processors to meat, protein, and packaged foods. So I had a really good view of the sector itself. It was a great experience across 15 years. And then after that, I really wanted to get involved in sustainability and went back to school and got a degree in natural resources. Spent some time doing some corporate consulting on ESG and sustainability. And more recently, last year, one of my old hedge fund clients called me up and said, "Hey, I just started this fund, Agroforestry Partners. We're planting trees on farms, and we need someone to run the day-to-day operations of the fund." And the more I did research on trees and their benefits, I jumped at the opportunity to join the fund and help tell the story.
Awesome. And so diving into what you're doing today, agroforestry is really a combination of agriculture and forestry, right? That's the gist of it?
Exactly. So yeah, just to level set for everyone, agroforestry specifically is defined as the commingling of trees, crops, and or animals on farm. So it can be any combination of trees, crops, and animals together.
Okay. And then at Agroforestry Partners, what does that look like? How did you guys take that and invest in it?
Yeah, so Agroforestry Partners itself is set up as an investment fund. We're a joint venture between three different entities. The most well-known is Cargill. And then the two other entities are a firm called Propagate and then another firm called Walnut Level Capital. Cargill, most people in ag know well. They're a massive global agribusiness. Propagate is a farm management company focused on agroforestry. So they have a really interesting software program that helps them analyze fields and farms and know exactly what to plant and where to plant when it comes to trees alongside crops and animals. And then Walnut Level Capital is a hedge fund based in Denver, Colorado, that's focused largely on investments into food and ag. And so we bring that partner set together across the fund to raise money from long-term investors. And then we take that money and through Cargill's farm network, we link up with farmers that are interested in planting trees on their properties. And we take that investor capital and buy trees and plant those trees on farms and then manage those systems going forward. Agroforestry Partners itself is a little bit different than your typical real assets fund. Most real assets fund look to purchase land away from farmers and landowners, make the conversions themselves, and then sell those projects down the road. We lease land from farmers. We want farmers and landowners to be along for the ride as we convert these farms to more regenerative practices. And so what we're focused on right now is planting chestnut trees on farms. And once we lease the land and plant those chestnut trees, and those chestnut trees begin to yield a commercial harvest, we will sell those chestnuts, and the money from those from that produce sale will go back to the initial investors and give them an attractive return over time.
Okay, interesting model. And I'm guessing part of the story, part of the reason these companies are interested in investing is for the sustainability piece, right? That's probably part of your thesis. For sure.
So when we talk to investors, and by the way, the the typical investor that we're talking to right now is a family office or a foundation or an impact fund that might be embedded into a larger investment bank. Larger commercial investors, and they are mostly interested in the nature-based returns that we can bring to the table. So soil protection or rehabilitation, water protection, water quality, biodiversity, carbon sequestration. They're interested in pursuing those ecological benefits that agroforestry can bring to the table. And then, of course, they also want to see a financial return as well. And our fund, we project that we're going to be able to deliver a net IRR of about 15 to 20% to investors over 20 years, which largely translates to an investor quadrupling or quintupling their money over 20 years.
Yeah, that's pretty unheard of in the agriculture investment space, right? Those type of returns.
Yeah, if you compare our return profile to historical returns in real assets, farmland, forestry, usually you'll see an average net IRR in the high single digits, maybe low teens. So if we are able to deliver something close to 20%, which is what we believe we can do, it'll be very, very strong financial returns alongside that real robust ecological return profile that we've talked about.
And do you think the main reason for that is just because you're not holding the title on the land? You don't have that huge capital sink on that aspect of it? Or where's that really driven from?
Yeah, it's a great question. And it's something that we do like talking about because we view our model as a more efficient use of capital, to your point. So if $10 million comes in the door up front, there's any number of ways to spend that money, right? And if you're a land purchase fund, you do have to devote a fair amount of capital up front into buying land. And so what we're able to do under our land lease model is we spend less of our upfront capital associated with the land costs, because the land lease is much cheaper than the land purchase upfront. And that allows us more money to spend on the actual conversion work itself. So we're able to put more money into more trees and get more trees in the ground, which is ultimately the workhorse here. These trees and their root structures are what is enabling us to have the biggest impact on the ground. So we're able to buy more trees, lease more land, and have more of a positive impact. So there's more of what we view as a nature-based return opportunity from our model. And then what you get into in talking about the financial return profile itself, to us, yes, that's juiced by the number of trees that we're able to plant because of our model. But it's also the type of tree or the tree species that we're choosing to plant right now. And for us, it's chestnuts. Chestnuts have amazing economics behind them, so long as we don't ruin the supply-demand equation. And there are a number of people around the fund that have really good networks within food and ag, which helps us de-risk offtake in our view. We have a lot of contacts and relationships across the grain trading space, CPG, retail. And so we're having a lot of conversations with potential off-takers about buying our chestnuts at a price that does not ruin the favorable supply-demand dynamic that's in place today, and thus will hopefully allow us to keep positive economics in place behind those chestnuts and deliver that return profile that we say we're going to deliver to our investors.
Okay. And are you integrating livestock and other cropping systems for revenue generation outside of just the chestnuts then as well? Or is it purely based off of the revenue that you're getting from chestnuts?
Yeah, it's a great question. Right now, it's purely based off of chestnuts. And we fully admit we're very transparent with investors and other stakeholders when we're speaking with them that what we're doing is relatively simple right now. And that's not the long-term goal. The long-term goal is to become more complex, because complexity is what delivers even better ecological returns to the land and our broader environment. But we knew in constructing this fund and this project set up front that we needed to be as simple as possible. And the reason that we need to be as simple as possible is we need to make sure that we get this financial return profile correct for this first fund, because we worry about taking one step forward, two steps back. If we somehow were to become too complex up front and have something go wrong, we would be worried about driving investors away from this opportunity. And so we knew that we had to pick one tree species, be as simple as possible in our planting and our management of that system. And then over time, as we learn along the way, we'll introduce grazing animals. We'll take a look at multi-strata type products. But right now, we're trying to be as simple as possible, just for the sole reason of wanting to be successful.
And going back to the sustainability piece on the environment, how do you measure the KPIs that you're really targeting? I mean, you talked about water quality, you talked about soil health. How do you monitor and measure that?
So there are any number of variables that we could track. And this goes back to the simplicity conversation that we just had. Trees and their root structures, I refer to them as kind of a Swiss Army knife when you think about sustainability and regenerative practices. I was amazed at the positive impact that trees and their root structures can have on the broader environment. They hold soil together, which keeps soil from eroding into nearby waterways. That keeps our water cleaner from not having as many nutrients wash into it. Trees and their root structures also help to build microbiology back in the soil, which helps get nutrients into our food and nutrients thus into ourselves. Trees bring habitat for different types of birds and insects that aren't present in conventional agriculture. That includes pollinator species like bees. And so trees can help return biodiversity back to the landscape. They sequester carbon, as many of us know. And the list really goes on and on and on. Trees also, from more of a social and economic standpoint, they bring a different income opportunity to the table for farmers and landowners. So there's a real social and economic impact there as well. So I say all of this to say, we can try and track all of that, or we can pick, 2 or 3 variables that we and our investors really care about, and community members really care about, and we can track those. And what we've heard loud and clear from our investors thus far is they care, number one, about carbon sequestration. Carbon really has to be present for them to make the investment. Number 2 is biodiversity. They care very strongly about biodiversity being present in the project before investing. And then number 3 really seems to be this idea of farmer income and farmer wealth. A lot of our investors and community members associated with the fund, they want to see that our projects are benefiting the landowners themselves. So we've heard that loud and clear, and we've organized our MRV, our measuring, reporting, and verification work around those 3 variables. And so we, as of this year, have formally started measuring those variables. We've hired a third party to help us do that. And we've got some really good results back thus far. We're seeing that carbon sequestration in our tree set that we want to see. It's still early, but we're seeing tree growth and thus carbon sequestration. We're seeing an increase in bird and insect numbers and populations. And then so far, so good. We're seeing in a tougher farm environment for farmers in the Eastern Corn Belt this year, we're really seeing our tree projects pay off for the farmers that we're working with. They're making more money than they would in corn and beans otherwise. So anyway, long-winded answer, but those are the variables that our stakeholders care about, and that's what we're tracking so far.
Do you see, I don't know what your makeup is of investors, if there's many that are European and many that are U.S. based, but do you see any sort of differences in that focus that they have on sustainability?
So, we're seeing a dynamic that's long been present in the sense of European investors are a bit further along in their expectations and their pursuit of these types of investments relative to American investors. But I will say that American investors are getting up to speed very quickly, and they are outnumbering the European set, at least in the conversations that we're having. So that dynamic is quickly changing, and American investors are quickly leaning into regenerative agriculture opportunities. As far as what they're looking for, no, it's really similar, Paul. It's carbon sequestration, it's biodiversity, and it's that social impact that they want to see, where the work that you're doing on the ground is helping the local community. There's a strong preference for that, no matter where the investor sits, whether it's somewhere in London or somewhere here in the United States.
Okay. Now, besides just as part of your investment thesis to get investors on board, do you see any other opportunities to really maybe even shift your business model to more of an environmental services type revenue stream? Or do you think that day won't ever come? You think it'll just be expected?
Oh, it's a good question. I'll answer that in 2 ways. I do think in the future that there will be other ways to monetize our work. I hope that there will be a soil health component there. I mean, it sounds like the market has kind of started with carbon credits and carbon offsets as its primary way to monetize this work. Now it seems like the industry is moving over to biodiversity credits or conversations about biodiversity credits. There's also a water quality credit that is becoming more attractive to different stakeholders. I would love to see something built around soil microbiology, because as I've done more work on trees and regenerative agriculture, there's just a huge need to return microbiology back to soil. Since 1950, this is just an incredible stat, but since 1950, vegetables in the United States have lost anywhere from 5 to 40% of their mineral content, simply because we're overworking the soils and they're losing the amount of nutrients that they once had in them to feed our food and thus feed us as human beings. So even if we think that we're eating healthier today by eating vegetables relative to whatever it is, cookies, the vegetable you're eating doesn't have the same nutrient profile that it once did. And so I do think that we need to find a way to monetize getting microbiology back into soils. And I hope that there will be some type of offering a la a carbon offset or a biodiversity credit or whatever it is in the future. And the second thing I'll say in response to your question is, even though investors want those nature-based benefits to be in place for them to invest, they still want to see your project stand on its own from a financial economic standpoint, through the sale of physical goods, whether that's timber or nuts or fruits or whatever it is. And so I would just say that I don't think that we will ever have a majority of our revenue and our return profile come from a nature-based offset or something like that. I think it'll always come from the sale of physical products, because ultimately that enables projects to stand on their own. And they're not at the whims, or at least not as much at the whims of changing political pressures relative to those, nature-based conversations that happen a lot.
Well, no, that's a really interesting thing. I know in the dairy world, a lot of dairy meetings I go to, that's kind of the conversation of, are we going to be seeing a large portion of our revenue at one point coming from these environmental type services, or is it still going to be mainly from the commodity that we're used to producing, right? So that conversation is a lot of different sectors in agriculture right now, and kind of curious to get your thoughts on that. But
yeah, for sure. And I don't think there's one right or wrong answer. I can just tell you from an Agroforestry Partners standpoint, we feel better about making our revenue and our return from the sale of a physical good relative to something else.
Yeah. Like you said, I think there's a lot less risk in that type of model. And if there's other revenue streams that come along down the road, that's just gravy on top, right?
For sure.
Yeah. So these enterprises that you guys ever invested in, I don't think I asked you this yet. Are you managing these projects and managing year on year the production of the chestnuts yourselves, or do you have another partner that you work with in doing that?
Yeah, I'm glad you asked about that. So the way that the operation works technically is when we come to an agreement with a farmer or a landowner, we put a 20-year lease in place, so that farmer or landowner knows that they're going to get a payment every single year. It's going to be steady. It grows with inflation, and we're gonna lease your land. But you continue as the farmer or the landowner to own your land. What we then do is we go in with our partner Propagate, and Propagate procures the chestnut trees that we're planting. They and their own partner set actually plant the trees, and then they manage the trees for the next 20 years. And collectively, we as a group, Agroforestry Partners, we will manage the offtake of those chestnuts as well. We'll manage how they get sold, who they get sold to, for what price, et cetera. But while the land stays with the farmer or the landowner, the trees themselves are owned by Agroforestry Partners. So we are responsible for their management and maintenance. We're responsible for the physical nut production that comes off the trees. And we're also responsible for any ecological production that comes off the trees, i.e. Carbon offsets. And so for 20 years, we and our partner Propagate and their partner Set will manage the trees and make sure that we're having good survivability in place and that we're doing what's necessary to properly upkeep the trees. And then the farmer or the landowner can be as involved as much or as little as they want around mowing or anything like that, or they can simply sit back and collect a check in the mailbox every year.
Now, are you guys targeting specific geographies or specific locations that this makes the most sense in, or do you see this type of model working in a lot of different geographies?
I do think that this model can work in really any geography out there, both in the United States and the world. For our fund specifically, this first fund is focused on chestnut trees. And so we're really focused on the eastern part of the United States, essentially anywhere east of the 100th meridian line that cuts down through the middle of the United States. And within that scope, we've identified the Appalachia region as a really strong starting point for us. Chestnut trees grow really well in Appalachia, and there are just a number of specific opportunities at the farm level to work with corn and bean farmers in that area and convert their land over to agroforestry systems. We've started in northern Kentucky. We've planted about 2,000 acres roughly to chestnut and hay in northern Kentucky and southern Ohio on farms that used to be growing corn and soy. But I think you could take this model where we raise money from long-term investors and have those investors fund the tree planting on farms through a lease agreement. You could do that model anywhere, and whether it's timber trees or a nut tree or a fruit shrub or something like that, you could replicate this model anywhere for sure. I would say for Agroforestry Partners itself, we have a number of competitive advantages. Really it's your partner set at the end of the day. The fact that we have Walnut level capital that knows the financial markets really well, Cargill that has a ton of farm relationships, and then Propagate that actually knows how to do this work on the ground. That partner set is such a competitive advantage. And so I would say for anyone that tries to replicate this model anywhere, you need the right partner set. And then you need to truly understand what tree or what system is going to work best in that geography.
Yeah, that's great insight. I think that's spot on.
And yeah, I guess to add on that as well is one of the questions that we constantly get from investors is, we get two the most often. Number one is, how are you going to protect your trees from weather and climate? And, if that's the income generating asset, what are you doing to protect that asset? And then the second question that we get most often is, who's going to buy your chestnuts and what price are they going to pay? And that offtake conversation is really, really important for anyone else that tries to replicate this model is, not only do you have to pick the right tree for the right geography, but you need to have a plan in place for how you're going to sell that product, whether it's timber or a nut product or something like that. So that's, an area that we've really been focused on. And then we've been, more upstream at the farm level. We've been developing insurance options to protect the trees and their crop production from weather and other stressors, just to make sure that we have that buttoned up as well.
Okay. Yeah, that definitely makes sense. Anything you can do to mitigate risk in a fund like that's extremely important to investors, right?
Absolutely. I mean, as we've talked to investors, they've said, look, we think it's great that you can potentially deliver a 20% return, annually. But they acknowledge that they're not solely in this just for the financial return, right? That the nature-based return is key, or is most important to them in a lot of respects. And so they just want to make sure that A, we're delivering on those nature-based returns, and then B, that we're protecting the financial return enough so that they can at least get their principal back, right? They're like, look, it would be amazing if we made a net IRR of 20%, but just do enough to protect the trees and their production such that I can make sure that I get my principal back in the end. And so it's on us to make sure that we're getting the right insurance products in place, make sure that we're geographically diversifying our tree plantings to protect against, a concentrated regional risk, and then make sure
look at the hurricane, right? That came through, probably not very far from where a lot of those plantings are, I imagine.
It did scare me a little bit. I mean, when it was winding up through Georgia and the Western Carolinas, first of all, it's just the destruction that happened there is incredibly sad. And we're learning more about how Helene impacted farmers and soil in that part of the world. And then as it was continuing up towards Kentucky, it's really scary to know that you've done all this work on the ground and just watch a storm like that tracking towards your projects. It's really scary.
Going back to the investor piece, I know that in the investing world, there's not a lot of really deep knowledge of agriculture or understanding of how the returns work, what the risk profiles are, and all those type of key metrics that investors look at when they're investing in something. So can you talk a little bit about how you go about educating people that want to invest in a project or that are interested in investing in a project like that to make sure they really understand it?
Absolutely. And it's a great discussion point because I think it's underappreciated out there. I would tell you that so first is just recognizing or acknowledging that a lot of the investors that we're speaking with, they are absolutely overtaxed with trying to evaluate all the opportunities in front of them. And their bandwidths are very, very limited. And so we try and do a lot of their work for them by putting together the investment memos that they need to do. We try and have that at the ready so that they can, take that and use a lot of information that's already set up for them. Or we bring them on site to our farms in Kentucky, and we've found that helps them a ton with just seeing the projects on the ground. We also have made it a point to be very, very specific with the work that we've done in building financial models or going through scenario analysis with them. We have a ton of resources available for investors as they evaluate our projects. And we've heard from investors that their due diligence was made a lot easier because of the resources that we had put in place. And those resources, to the point you just made, sometimes are as simple as including educational materials. We've put together primers on the agroforestry industry. We've put together primers on agronomy. How does it work at the soil level? How and why do trees have the impact that they do? So it's getting educational materials out in front of people. It's trying to help them with some of the necessary work that they need to do internally at their own firms. And then it's just getting them out to the farms so that they can see it and touch it and hear it. And we found that those things together collectively do help investors, makes the process easier for them. But I'll say, from a baseline, they are still way too taxed. They do not have the bandwidth to organize and evaluate these projects on a normal timeline. A normal due diligence cycle should probably take 3 to 6 months. And right now it's well over a year Yeah, so these due diligence cycles have really been pushed out. You're having conversations with investors for a long time, but it's because there's so many opportunities out there for them, and they're just staffed. They're not staffed appropriately, in my opinion, and that's not on them. There's only a certain amount of budget that's available, but there's a real bandwidth issue out there in the space right now.
And what's the timeline on the project itself? Like from the deciding, hey, we've got some more funds that we can continue on with this. What does that look like in that whole process time wise?
So if you think about planting trees, specifically in our case, chestnut trees, this isn't a situation like conventional ag where you decide to go plant corn and you just go buy as many seeds as you want and put the corn in the ground. There needs to be a real supply chain built out ahead of time to make sure that you have enough chestnut seedlings to go and put in the ground. So we work directly. We partner with a couple different nurseries to make sure that they have the tree stock available for us 1, 2, 3 years in the future. And that's a little bit of risk. We have to take some risk on our end to essentially procure those seedlings ahead of time so that the nursery can do what it has to do to have those trees ready for us. And then as we get money in the door, we take ownership of those seedlings from those nursery partners. We plant the trees in the ground. We've been prepping the land ahead of time to make sure that the land is ready to receive those trees, because a lot of time the land is pretty beaten up from monocropping practices over 10, 15, 20 years. And then once those trees go in the ground, for chestnut, it'll take about 7, 8, 9 years to produce its first commercial harvest. So there is the better part of a decade where there's no money coming in the door. It's just all outflows to make sure that you're maintaining and managing these tree sets properly. And then around year 9 or 10, you'll start to get positive income through the fund as we start selling chestnuts into the marketplace. And then once you do that, the model really ramps up and you start getting positive cash flows in that second decade as a part of the 20-year lease agreement that we have in place. We're a 20-year investment fund to match the 20-year land lease that we have in place. And so there's a long lead time from getting money in the door to getting that financial return profile in place.
Yeah. And investors are okay with waiting that long on an asset that's they don't own the dirt underneath. That's not a big issue for them. Or was that one of the obstacles that took a little bit to overcome?
Yeah, no, it's an obstacle for sure. People don't love that it's a 20-year fund, right? People would much rather have it be a 5 or a 10-year fund. And then people don't love that their first positive cash flow doesn't come until year 10. They'd much rather have that in year 1 or year 2. The land ownership is not as big of an issue, only because we do own the trees, and the trees and their ownership are transferable with land transfers. So, we will continue to own the trees and their production, like I said, both in the form of nuts and carbon offsets. So investors know that they're at least owning something at the end of the day. It's really the term that they have to get comfortable with. And what we've told investors is, I don't think any of us actually expect to hold this fund to full term. I don't think any of us expect to actually hold this for 20 years. We think that as you get out towards year 7 or year 10 and these trees are showing their viability and showing their canopies and that they're starting to produce nuts, we know that there are plenty of buyers out there, whether it's a pension fund or another real assets fund or you name it. There are plenty of buyers out there that would love to buy our project set And we know that there are opportunities to monetize this well before 20 years.
Very interesting. I've really enjoyed our discussion today on a topic and a sector that I didn't know a whole lot about. So I appreciate you bringing me up to speed on it. Really intrigued by what you guys are doing there at Agroforestry Partners, and enjoyed getting to know you today.
Thank you, Paul. Same here. I really enjoyed the conversation, and really appreciate all your listeners tuning in. Go out and plant trees, and the more work that you do, the more research you'll do on trees, you'll be amazed at how much of a positive impact they can have for our planet.
How can people find out more about you and find out more about what you guys are up to?
Sure. I would direct people to our website, agroforestrypartners.com. There's a wealth of information on that site regarding our projects. Also, the educational materials, we make all of that public on our website, and people can read our impact report on that website as well. Or you can find me on LinkedIn. I keep a pretty strong presence on LinkedIn, Brett Hundley, and look forward to connecting with people.
Well, great. And we'll put links to those in our show notes so people can check that out as well. So again, Brett, thank you so much for being here today. I really appreciated it.
I enjoyed it. Thanks, Paul.
Thanks once again for listening to the AgCulture Podcast. If you enjoyed today's episode with Brett, please subscribe and leave a rating and review. It's the best way that we can stay connected and that you can help support our mission here at AgCulture Podcast. Once again, thanks so much for tuning in. And I'm Paul Windemuller, and we will see you next week for another exciting episode.